Hello, traders. How's everyone doing? Hello, Alexander, Hugo. Let's take a look around. So, something I've been talking about for a few weeks now, hello, Mira, is this. Good morning, Laura. So, here we are on the precipice of a breakdown on the 10-year yield. We need closes under the solid green line. And if you just do a measured move, call it a rectangle distribution top. Marco, how are you? Jeff? So 77 is about 30 bips from here. Actually, it gives you 120, 118, 120, just on a measured move from the high to this pin bar here. You would think that the dollar would make hay out of it. Euro is up. Are we just going to make the run for new highs here? Now the Dixie is only 76 away from the January low. I like the way silver is outperforming gold. I'm long silver. Okay, thinking that we're going to make a run here. You look at silver, you probably, you look at this and we start clearing this moving average of 27.75. I think we could attack these highs, you know, head up towards this 28.10 level anyway. You're wrong now under 27.30. That's where my stops are on silver, and silver's outperforming gold. Haven't seen that in a few days. Gold down a buck still looks okay to me. The only other scenario I could see is with a dollar rally that we could pull back to the breakout line again. I'd get a little suspicious if that happened. Um, Something else I wanted to talk about was Bitcoin. So, you guys know how I like that expression by W.D. Gann. If you don't learn how to change your mind, you won't have any change left. Karen, welcome to Face. Nice to meet you. Is this Bitcoin? So we had this breakdown yesterday, and all the way down, there really weren't any buy signals. But this is the first false breakdown that we have here. And sometimes those are your best trades, and to me it's at least a minimum of covering shorts and the first sign that crypto is stabilizing and could be good. Of course, we still have a few days left to have some type of reversal week. I haven't even looked at the off number. Let's see where it is. Oh, it can be done if we close by Friday. In fact, we could end up with an outside week if we start galloping here. But the 2 week off number is 35,669. So we're only about 400 bucks away from having a 2 week reversal in Bitcoin. Oh yeah, so how do we get weekly? So there's never a weekly candle, it's just one long perpetual candle. Gark, that's a great point. Hi, Angie. Sunday night, Jane? What did they close it for an hour or just a demarcation? Okay. See, you learn something every day. Okay. Tom Demarcation? Very good analyst, Tom Demarcation. And a potential big head and shoulders on the weekly. So call this a neckline here, Paul. Do we don't have a right shoulder yet. Anyway, it's also approaching these weekly moving averages, 50 week at 29,000. Okay. Thank you guys. Oil is I think Grega was talking about 71. It's diverging on multiple time frames. Here's your 4 hour. See how we're diverging there? I think some people were talking 71. Non-confirmation on the 2 hour as well. And the 15-minute is the only one. So if we had one more high, I don't think the 15-minute would confirm. This looks like a flag. Okay. But I think this is big news. Okay. So we're going to see what's going to make hay out of what do you guys think are the markets are going to make hay out of, say, yields go to 120? What do you think it's going to be most supportive of? S&Ps? Silver? Euro? What do you think? Lower rates, what's it going to help? Okay, and that's tomorrow. Silver? Okay, Amira. Pound Aussie? Okay. I'm actually looking at Euro Aussie. This was a Greg Horvat idea that, we could end up with some kind of failing rally. It was rejected from 50% here, but I didn't do anything in front of the ECB. So yesterday's guest Giles said that the ECB will not be hawkish. Oh, euro pound. Okay. All right. So that's all I see for today. We have my friend Ronit with us today. Ronit has some great charts. He does a lot of correlation work, a lot of cycle work. So looking forward to speaking to my trading warrior brother Ronit at the bottom of the hour. Everyone having a decent week? Who here is in the crowd that's hasn't made the decision to become part of our community yet? And who's going to step up and do it on Winning Wednesday? It's a good day to do it. Are you a subscriber, Paul? I don't think you are. Anyway, I know you're managing some money, and it's interesting. A lot of people that are, oh, okay. Well, they let you trade crypto and cable. I know that's what you were looking for. All right, so that I think the big days tomorrow, all week is kind of seemed like waiting on the ECB. So every week we're waiting on something. A little too soon for the dog days of summer.
It is. And you know what it's also too soon for?
What, buddy?
117 degrees. I'm going to complain about that for the next few days.
Today is supposed to get there?
It's going to be there, I think, on Monday or Tuesday. Yeah, I mean, that's, I was
early for that kind of number.
It is. I mean, it's really early. I was telling, all the traders that are outside the U.S. that use, Celsius, and I'm like, that's like 57 degrees. They're like, oh my god, that's like Saudi Arabia, or I'm sorry, that's like
that's
somewhere in the Middle East. And I'm just like, yeah, it's like Dubai weather. Yeah, it's gross. Anyway,
there is some news before you get going, Blake. Was that strip clubs in Florida are offering bonuses. They have a work shortage there.
What?
There's a work shortage of dancers.
Oh,
so I just wanted to let you know.
Well, thanks for letting me know. I appreciate that. Thank you. So let's talk, since you were talking Bitcoin just a little bit ago, and really it seems to be.
Yeah, am I all wet on that or what?
What's that?
Am I all wet? The fact that maybe it didn't negate there's going to be a bonus. All wet on Bitcoin negating a breakout. I'd like to see your charts.
Well, yeah, actually, yesterday during the
Oh, you have
daily
in the game.
roundup,
Okay.
I was like, be careful. I think we're going to find some support here. And I'm like, everybody's chasing the market short.
Yeah.
I do think that the euro or the Bitcoin's going to roll over, but
Okay.
I'm like, don't chase it, lower yesterday. And we've been bouncing since the daily roundup yesterday.
Yeah.
But we are right up against trendline
Yeah.
resistance.
It hasn't negated it on yours like mine, I
Not
must say.
yet. And
True.
yeah, I think Bitcoin and we could actually end up doing more like a wedge,
Oh,
which
okay.
means we could actually bounce
I see.
all the way back to maybe 36, 37,000. I think it's entirely possible. So it's
What
interesting.
isn't in that in this
What
what
what's
isn't possible with Bitcoin?
right. Well, and especially in what you had mentioned, it is a very sleepy market, and we are really, um, you know, entering the summer doldrums way too early, as far as I'm
Yeah.
concerned. So that's the
Yeah.
thing that worries me a little bit. But at the same time, the markets are elevated. We have the big catalyst for this week will be, the ECB tomorrow, and also we have um, CPI tomorrow. Now, today we have the Bank of Canada. So let's talk a little bit about the BOC, and let's talk about where like the dollar Canadian trades, and the one that I'm watching really more closely is the Canadian yen. But you can see the dollar Canadian is really still stuck in that
Yeah.
range, right? It's the 120 to 121.50 range. And um before, whenever I talk about like these big ranges, or excuse me, a big event coming, my initial gut instinct is would tell me that we're going to be mid-range ahead of the number or ahead of the event. So you can see that we're about mid-range ahead of the Bank of Canada, which makes complete sense to me. The upper end of the range is 121.50, the lower end of the range is 120, and we're in the middle. And whether we break higher or lower is going to be dependent on what the Bank of Canada really says. Now, most people know that the Bank of Canada is looking to continue to taper bond purchases, and the the assumption is they're going to do it every other meeting, and this is the meeting where they're not expected to actually move on rates or move on bond purchases, but the market already expects them to do, or to continue to taper. So the risk at this point in time, in my opinion, is if the Bank of Canada actually leads us to believe that they're not going to be tapering as quickly as had expected.
So they
Um,
taper the taper talk.
if they taper the taper talk, then we have a Canadian currency that weakens. And I guess the one thing I need to note here, let's we can pull up the oh geez, what is the Canadian futures 6C? Here we go. Let's take the Canadian currency, the front month contract of. Why is this not working? How come I can't pull that up? That's I don't know why I'm not able to pull that up. Anyway, it's not loading for me, but we could do it with this. And you know what? I'll do it like this. I'm just going to do it with a different feed really quick. Okay. Hold on really fast. Dang it. Sorry, guys. Sometimes
It's okay, Blake.
really dislike Zoom. Is so irritating. There we go. Okay. Here we go. So there's the dollar Canadian, and we can see that the Canadian currency has been strong, but look at the difference between that and what's been happening in crude recently, just recently. So you know what? Let me try that again. I'm going to delete that and compare. I clicked the wrong thing. WTI.
New price scale.
Yes, I know, Steve. I just hit the wrong one. There we go. So what you see here is crude has really taken off over the last few weeks, and the Canadian has not. So anybody who's long Canadian currency, whether I was trying to pull the futures up, you can see that over the last few weeks here, as crude has taken off, the Canadian currency has not strengthened. That's not to say it won't. I'm just saying that if you're playing that correlation, it hasn't paid off at all. And so and I'm sure that people that are trading that correlation are like, hey, wait a second. So that's going to be a risk for the Canadian currency following the BOC. If I'm gonna just say for a couple reasons. If the Bank of Canada tapers the taper talk, as Dale put it, or if they actually talk down their currency, they've actually have been vocal in the past when the dollar Canadian was trading at 124, 125 about how strong their currency has been. And the Canadian dollar has basically been the strongest currency in 2021 in the FX market against the dollar thus far. I think it's pretty. If it's not there, it's up there. So, if I guess the point I'm trying to make is the more explosive move that you're going to see in the Canadian is going to be a reversal, because the dollar Canadian has dropped and has consolidated. It hasn't moved lower as crude oil has been moving higher. So the risk right now is if the Bank of Canada actually talks down the Canadian currency, in my opinion. I wouldn't bet on that right now, but what I would be thinking is if you see the dollar Canadian actually break through this resistance at 121.50, that to me would signal that we are ready for a reversal. So I'm not going to be buying the dollar Canadian until I see us break out.
Plenty of shorts to squeeze, Blake, if that happens.
There's going to be a lot of shorts out there in the market that can be squeezed, I think. And so, and this is kind of like the same situation that I had for non-farm payroll. I think we had a really, really good setup for dollar longs, and it didn't transpire. So we all had to sit there and go, well, that sucks. And like for example, I actually last Friday I picked up dollar Canadian at 120.90, literally like right here. I think it was right here, or no, I'm sorry, Friday. So it was like right here. I picked it up on this little dip, and it took me until yesterday to get out of it. I really didn't trade it too well. I was thinking that we were going to bounce higher following non-farm payroll, but I sold it yesterday after sitting in it, and it's like, the dollar trade I think the dollar Canadian is going to be a good long, but it's more dependent on the Bank of Canada at this point. So we'll see what happens. The market could also be waiting for tomorrow, which is the ECB and the CPI. But anyway, that's kind of what I'm looking at with the Canadian, and I'm hoping it sets up well today. Remember, the Bank of Canada rate decision today, it comes in at 7 a.m. my time, which would be 10 o'clock in the morning Eastern. So in about an hour and 20 minutes, or hour and 40 minutes, excuse me. So that's what I'm looking at. Stelio, Steve, good morning, guys. How are you?
Why did you wake me up? Good morning.
I'm, you know, I was thinking the same thing when I got up and I looked at prices. I'm like, did they even move last night?
What
That's
time
what
will they leak central bank data?
Well, Canada, they never leak. Canada and UK.
Fine. It's probably out there already. Anyway, just curious about the leak time. That's all.
Yeah, I think what I have to say is don't short quiet markets or sleeping markets. That's what they say, isn't it?
Yeah.
I totally agree.
We're getting into this summer trading now. Sorry, let me put my phone on mute because
It's not even the solstice yet.
Yep.
It's still spring.
I think, and like I was saying yesterday, there's no reason for anything to change yet. So I wouldn't go against this. It's going to be slow. It's going to be grinding this way I think for most of the summer, unless obviously we get some kind of big event that can change this. But no, I wouldn't go against it. And cryptos are, as usual, quite volatile. They're rallying today. They were selling off yesterday. It's, you know what, something we didn't talk about yesterday for cryptos. Did you hear about that the ransom that was paid?
Yeah, they recovered it.
They recovered it. They found basically one of the main arguments of cryptos. Oh, it's totally anonymous, secure, and all that. It just goes out of the window. If somebody wants to, it looks like they have a way of finding tracing it. Exactly. I don't know to what extent. I'm not an expert in crypto, but look, I'm seeing what's happening, and if you think it's 100% secure, I would say, and anonymous, I would say think again. But
yeah,
they say that was a fake anonymous.
Oh, the one that talked about Elon Musk, you mean?
Yeah.
Or what? Yeah, maybe, but that's a different thing, right? But
yeah.
Anyway, crypto's going to be.
It all seems like the same surreal environment. Anyway,
cryptos are cryptoing. Metals are not doing anything. It's just if FX is not doing anything. So I would just say. If you have a position and it's gone well, just stick with it. If not, I don't have any conviction at the moment. I really don't.
How about you, Steve?
I do have conviction.
About?
What were you convicted of, Steve?
I was convicted of burglary. No, my conviction is in essence what Stelios said before, that the current market environment is not one that should make you want to fade risk on and dollar off moves. As simple as that. So, same old. As long as things are quiet, we are in an environment that benefits risk asset appreciation, albeit probably slow, like this dripping type of price action higher, and dollar moving to the downside. So, yeah, I mean, I know it's boring. I know it's, we've been stuck in this environment for quite some time, but other than crypto, nothing else seems to want to, produce any worth mentioning moves.
Yeah, and we were just and just to let you guys know, we were talking with Mark Faber yesterday. Faber, excuse me. I don't want to take away from his interview, but we were having discussions about cryptocurrencies and just all the speculative money has gone to there, and the meme stocks, and it's pulled volatility away from everywhere else. But I think we have to take into consideration that whenever the main markets, whether you're talking about
legacy markets,
yeah, that when their volatility dries up, like you've seen it, we are probably pretty close to some sort of explosion happening in volatility, which is usually not a good thing for price and risk. But we, as Steve just pointed out, we don't know where we're at it and when that happens. But it's worth noting. I think we are going to be set for some higher periods of volatility at some point, and we have to be prepared for it. So,
Yeah, at some point being the key phrase.
yeah, of course. And, and that's when you just take, like this is a daily chart of the S&P. I mean, I know we discussed this yesterday, even on the morning edge, that, hey, while we're above 4,200, this trend line, you got to be pretty constructive with the S&P, and definitely while we're above this longer term trend line, which comes in around 4,150. So, really while we're here, even if we dip like a day like today, if we just dip lower, you just got to be prepared to buy risk on a little bit of a dip while this trend line's intact. And while that trend line's intact, we have
Yeah, and this bid is relentless. Yesterday, at some point, the markets were looking like they seriously wanted to roll over.
Right there.
Yeah, and poof,
And what happened?
that was
yields went lower, and that was it.
Yeah, I think that yields move lower, and that's worth noting, isn't it? I mean, that yields are actually moving lower; they're breaking lower, and this is one of the things that I think we should, actually be talking about this morning. I mean, look at the 10-year. The 10-year is actually risking breaking lower. So what are risk assets going to do when yields move lower? And I guess you have to ask yourself, why are yields moving lower? I mean, if there's this bid coming into bonds, why? What do you guys think?
To start with, I don't think that yields are breaking lower. I think we're still in a period of consolidating the prior gains. Now we need more time to figure out what kind of a formation is that. Is that was it a triangle? No, it's not a triangle. We know that now because we broke it. Is it a channel? It might be a channel. I mean, it still channels nicely. But I do think if you notice how much time we've spent correcting without really moving lower, I mean, we've retraced like a small fraction of the previous move higher. I'm more or less convinced that this move shouldn't extend really much. I would be looking towards 140 to be support. And I think that the next big move is again to the upside and not to the downside. Now, there is also a second element to this, is that I pay attention to the bond markets, but I don't believe that every type of move they make is really important. In what sense? This is not a market anymore. We know that it's a hugely distorted market. So especially smaller moves, in my opinion, are a lot of less significance, especially having to do with fundamentals, right? In the past, I mean, until like several years ago, bond markets were like super important, the most important markets. They were the ones that would tell you if the market is expecting inflation, if the market is expecting financial trouble, if the market is expecting any number of things. Nowadays, we know that bonds don't anymore depict the fundamentals. There is no price discovery here, because if there was price discovery, we wouldn't have a nominal yield that's less than the reported inflation. Who wants to loan any government for 10 years, 20 years, 30 years their money to make back a negative real rate? Nobody wants that. Nobody wants to give their money, especially, at some point in the past, for example, during the financial crisis of 2008, somebody could make the claim that, yes, there are people that are willing to lend a government their money by losing a little bit over time, just to make sure that they're going to get the vast majority of their money back. But at the moment, we are claiming that the economy is absolutely under control, that we're in a recovery. So the only argument that's left to have a negative real rate is gone out of the window. Nobody wants to lend.
It's because you have a huge buyer in the form of the Fed.
Exactly. Not only the Fed, all major central banks. Exactly.
Yes.
So the only people participating in this market anymore are A, central banks, B, short-term speculators that are looking for opportunities, windows of opportunity between quantitative easing programs, etc., that they can front-run central banks, buy the same bonds that they know the central bank is going to be buying off their hands a few weeks or a few months later. So these are the only market participants left.
And me. I'm just
Yes, absolutely. I know that you want to invest all your money in 30-year treasuries.
I can't wait. Actually, it's exciting. But thanks, Steve. Thanks for your update. So I think we should be watching yields though, because will they have an impact on on the dollar? They might, and it's something that I think we have to keep our eye on, because remember when the markets are really sleepy quiet like they are right now, they start looking for things to prey on. So if we see yields move, you're going to see the masses start looking over there. But at the same time, if everybody starts looking at, oh, look at this, silver is starting to move and so is gold, maybe it catches the attention of everybody else too. And by the way, just let you guys know, here's a good example of silver trying to break higher just a little bit.
I hope I don't jinx Stelius put out a buy yesterday at 62. So hope I don't jinx you guys.
No worries, man.
First long in a while. So
Oh, did you go long silver?
yeah. I figured,
nice.
well, you know what? I looked in the mirror and I saw my hair and I said, I ought to buy some silver.
Well, that's one way to do it. All right.
That was my signal.
That's why Stelios doesn't trade much. He looks himself in the mirror and says
I see
nothing.
no hair. Yeah. Exactly.
Oh, you guys are so mean.
Well, hey, Dale, before I let you take over and put Ronit up there, I just want to say, guys and gals, visit our Forex Analytics webinar sponsor, Pepperstone Securities. They are, they're the broker that makes sure that we can continue to offer these free face webinars for you. If you want to learn how to get Forex Analytics for free for a few months, open a Pepperstone account, and you have to do it through this link here. And then if you're outside the US or Canada, make sure you visit Forest Park FX, because they will help you get cashback rebates on your trading. So guys,
I don't know if I told you, Blake, I'm going to be becoming a client of Pepperstone as well.
Oh, hey, there you
days.
go. That's awesome. That's awesome. I know Leandro has been a Pepperstone client for 6 years or something like that. He's our gentleman that does the Spanish webinars. I mean, a lot of people talk great about Pepperstone just because they do a lot of, if you're a client of theirs, you get you have an account manager, which is nice. I mean,
Yeah.
You go to a lot of these brokers, like, you open a Thinkorswim account.
What's that, a sink or a swim?
That sink or swim, yeah.
Oh, and Pepperstone has a new tagline. Steve's a pepper, Blake's a pepper, I'm a Pepperstone too.
Oh my God, Dave.
Guys, only if you lived in the United States and you saw 1970s Dr. Pepper commercials on television, then you would understand exactly what Dale's saying. For the rest of
what Blake is saying is, if you're as old as dirt,
if you'll
remember what Dale is talking about.
Dale and I are, then you might remember that too.
Dale was already grandfather in the 70s.
He's like, look, I'm going to show everybody that I'm over the age of 70 right now. All right.
Not quite, bro. Anyway, it's really freaky. Anyway, Ronit is with us. How you doing, bro? I'm going to ask you to unmute. Thanks, Blake. Good hunting today.
Yeah, take care, guys.
And you guys can
Enjoy.
catch Blake in about 40 minutes for the morning edge, and waiting for you, Ronit. Always look forward to seeing your. How are you, buddy?
Good, great. How are you?
Oh, good. So always interested in your esoteric work, and you do a lot of what do you call it, correlation work where you're always, you rarely just do a pure chart. You're always comparing something to something. And I'm wondering why you're always doing that.
It's because of curiosity. So you're
Okay.
curious and you actually come up with some kind of idea which actually is not the usual. So what is technical analysis? People actually say 50 moving average or 200-day moving average. I always ask why. Why would you use that? Or why would you use a trend line? Is it because it's something like a slope, or why is it related to
Yeah.
time or price? It's just curiosity, and you can call it like fluke, that maybe I'm able to see off correlated, and it's not seen holistically. So
Okay.
and it gets interesting once you
Okay.
actually unravel. It's something like, even I was a non-believer, so that's why for the first time when I was doing something 10 years back, I actually wrote something to Larry Parsonto. He was a harmonic trader, right?
Right.
So he wrote to me, I've never seen anything like this in my 45-year Wall Street career. I would request you do not share this with anyone. That's where I got it. Maybe I'm onto something. So till then, even I didn't know what's going on.
Okay.
So I still have that mail, but
Well,
I've never
thank you
told him
for not listening to Larry
that. Oh yes,
and
but
sharing your work. So,
yes.
now we know how Larry thinks. So, okay, so you want to talk about the moon cycle or the royal cubit,
Uh,
but you had like a $200 oil headline up there. Is that
oh,
later in the presentation?
yeah, that's later in the presentation. We'll actually go through the sequence of things.
Okay. Well,
We'll
go ahead. I'm just gonna let you take it away.
Okay, so let's start with something interesting. This is the ancient royal cubit. So why we actually find?
Can you give us a little more volume, Ronit? Just a little more volume.
Let me please. Can you hear?
Better.
Okay, so this is the cubit where the Egyptians actually found a way to measure things. So it's kind of related to the moon cycles also. So let me draw it. So there are 28 units for 1 meter. It's actually related to pi2. So it's something like pi plus 0.523. So 6 units of 6 qubits, royal qubits, is equal to 1 meter, or you can say 3.14 or something like that. So we'll come on to that. So there are 28 units for each qubit, which is kind of a measurement which the ancients actually used it. So the similarities are, even the lunar cycles have 28 units. That is 28 days it takes to go through one cycle. That's why we actually follow the full moon and the new moon, where
Right.
there is a change in trend. So it's nothing new. So a lot of people actually did try about lunar cycles, and they said that if 28 into 13 months are there, there are 366 days, which is a 13-month cycle. But then there were people who were actually talking about sun cycle. Sun cycle was like 30 into 7 plus 31 into 5. That's like 365, 12-month cycle. So some people followed the sun, different religions, or Asia, they followed the sun as a cycle. But the Arabs and other nations followed the moon.
Yeah, Hebrews, the Jewish people. Is
Exactly.
that cubit similar to the Hebrew inch, which I think was different than what we look at as an inch, and that was the measurement they used as slaves for building the pyramids, the Hebrew inch?
Basically, 12 inches is 1 meter. I think 1 cubit is close to 12 inches. Maybe that's true. But
You're breaking
here's
up
an
a little
interesting
bit.
fact.
Yeah.
Yeah, here is an interesting fact. So just lift your hands, and how many phalanges are there in your hand? So this is
5.
13-month cycle. No, you just have 5.
Yeah.
Are you sure? So a phalange, in each finger, you will have something like phalange.
Okay.
So there are 7 colors. So this is like a phalange. Each hand, you can count 3, and there are only phalanges in your thumb. So 14 phalanges and 4 phalanges on the right
And
side.
there's 28 again.
Exactly. So 28, again, you can have 4 points to it. So that it's Sunday, 7 days, sun, 7. So maybe that was a way to calculate cyclicality. Now, interesting thing, have you played the piano before? So how many keys are there in it? 88 keys.
How many what?
So piano, the musical
Oh,
instrument.
piano
you
keys.
play piano.
I'm not sure.
Maybe I think 88 or something. So when you actually divide 88 by 28, what?
Okay, you're breaking up a little bit.
Okay, 88. 88
All right.
divided by 28, you get 3.14. Maybe that's
Okay.
why it's piano.
Okay.
Piano. So something
Oh,
interesting.
piano.
So maybe they knew it. So you actually create with 28 phalanges. You press those keys with different pressure points, if I'm not
Right.
wrong.
Right.
So somebody can actually check it, but this is not no coincidence for some reason.
It's amazing.
So actually,
I learned something that from, to me and most people, pi plus ano would have been invisible to me until today.
so you can try it. 1 qubit is like 0.523 into 6 parts. That's close to 3.14.
yeah.
So pi by 6 is like they measured time in some way, measured time, price, and energy. So it was not just a flash in the pan kind of logic. So
Okay.
so let's get on to topic.
Okay.
Indices. So as we discussed last time, what actually breaks this market? So Dow chart. Can you?
Yeah, we got it. Can you scroll it up a little bit? Now down a little bit. So we're missing the top of it now. So just a little, give it a little
Very
touch.
sensitive.
Oh, okay. That's pretty good. That you had it pretty good before.
Okay, can you see it now?
See nothing now. There. Stop. Okay.
Okay. So this is the 100-year cycle. I mean, 100-year trajectory of what was happening in the Dow. Now observe that the last wave was equal to the fifth wave, the 100% move. I think 18,000. We are expecting somewhere around 37,000 last time we discussed. This could be it. We have another 7-8%. It actually matches with 29 cycle, and we had a free timeline on. So I will actually move my cursor.
Ronit, I remember, like, you send me a lot of charts during the week and stuff, and you had a lot of things concluding around the solstice, June 21st. Several months ago, you had things that pointed, cycles that pointed towards that date. Am I correct? Was I interpreting?
Yes.
Okay.
But what would be the trigger? We'll come on to that. So this is a Fibonacci timeline where I've used 1974 as a starting point and then projected to 1987. Can you see all the pinpoints, even October 02 level bottom, and then there is a crisis at 161.8, and then we had a last year 20 crisis, which technically managed till it worked out. So this is a Fibonacci point where there's a lot of negative energy. So it did come back as a feedback, but we'll be looking at June, but the price has to match whether it's June or July end because it's a monthly cycle, right?
Okay, right.
So let's move on to the next one. This is again, if there is a calculation, remember that 11,000 is the bottom part, which is a very critical point. Why it would reach, I would actually statistically prove it. So this is where we are looking at the 5 waves, which were happening from March 2009 lows. So probably that's an extension and this is the end wave. But again, we have to see what actually triggers it off, right? So next one. So if anybody wants to use this Dow pressure points, you can actually use why it would happen. And if you observe 33,600, there was a flash crash where currency started rolling over, and that 33,600 was held, and everything started reversing. So same thing goes with last time when we had an interview around 30,000, 36,600. There was a bull, and then it started accelerating. So next time actually beats 33,600 to some reason, probably that's it. You will see a rollover in currencies and all. Now this is very nice, where the federal debt by divided by the Dow. So if you look at it from 1967, it is holding a trend, right? So only two periods were inflation trends where the market started breaking. When was it? 1977, when gold started rallying, and 2007, when again there was some problem happening, rollover, and oil started going up. So we are at that crossroad again, but we are not sure that will it stop at 37,500, or even it could go to 42K, because the more the debt, the higher the indices go to some reason. So let's look at the next chart. This is again S&P 500 equivalent to. So you have a pressure point. Why I think that the S&P 500 might not cross 43.73 is because the dollar would roll over. Basically, there's a ratio of Dow to S&P 500. Dow is like 30 stocks. So right now the ratio is somewhere around 8.2, 8.3. If the dollar breaks 9, that could actually well up be at 87, whereas where the Dow could actually be forming because maybe the foreigners are buying. So we'll look at the ratio again. We'll come back to that. This is one more where they say that if the Dow goes up to 37,500, someone said that NASDAQ could also go up. But if you see clearly, the underperformance is actually striking now. The Dow actually started making 10% higher, 30 to 33,000, but the NASDAQ didn't move further, more than 14,000 or something like that. It's grinding.
So do you interpret that as kind of bearish, since NASDAQ led it on the way up, that it's not participating the last several months?
Exactly. And you can see the cycles. So the March 2002 cycle, where the Dow started outperforming, NASDAQ underperformed. And
Right.
this has been going on in 70s, so where the money is moving. So if the ratio, let's say the Dow hits something like 37,400 due to oil, maybe, what should be, if the ratio hits 3 or something like that, 37,400 divided by 3, that comes to around 12,400. That's the pressure point of NASDAQ, where you can say that there is a crash happening. Yeah, okay. 12,450, 400. That means that everything will start selling off. So there are programs which are actually, they'll be long Dow, short in certain stocks. But when everything starts going up and something underperforms, you have that spreads opening. Like in 2007, banking stocks, people had shorted and still gone long and Dow. They would have made it spread. So you have noticed that spread where the wide gap is opening. So let's move on to the next one. This is the NASDAQ stock. You can see that there is sell signals over here. So these are pressure points, like Fibonacci pressure points, where 13,000 is a very critical mark. Will it go up? We don't know, but there is enough reason that it's highly overbought. And the first flash crash from 13,000, it could be as good as something like a Bitcoin. Go half, something like 5,100 or something like that. But we have to see the trigger. So it's from 1974. So that would help. Then this is a good chart where it says that this is a huge top, where a Dow divided by DXY. So if DXY reaches 100, or say right now it's like 415, right, is the top which I'm projecting. I connected 2000 highs and 2007 highs, which is around 415. So let's say the top is around 37,400 divided by 4.5. So the dollar could be stagnant, where 84.90, where it starts mattering a lot. And assume that you remember the 11,000 which I was showing you. So let's assume that DXY breakout is around 22 into 87.2, where I marked the circle. That's around 10,600. It matches. So that's where a flash crash will suddenly happen because of an event. We don't know yet, but we need to look for evidence.
So if we're
So-
topping here, does that mean a weaker dollar?
Initially a weaker dollar, but what would cause that? What could be the trigger? It could be $200 oil. That's possible.
Okay.
And if $130, how much the central banks will be able to tolerate? Will the yields go past 2% and then spike to 6%? That would catch everybody's attention, because we can see in the next chart the Dow Gold ratio. It has always turned around 20, 19 or 20 mark. So that was the Nixon shock. And then we had August 2007. Always around that 20 mark, there is a problem. And it reversed around that 20. So it was around 33, 34, and gold was 1700. So even if you multiply 1700, which was the bottom somewhere, into 20, the Dow hasn't done much. It has just moved back and forth in a range of 3-4%. So that is a significant underperformance. So that's the reason we have to watch gold, because that could be tracking what's coming next. So let's look at the next chart. I think this is, again, we have seen it, the Dow, debt divided by Dow. Now this is very interesting. The Dow DXY, if they actually print money, right? The federal debt, whatever it is, right now the ratio is like 312,667. It goes up by 10%. The ratio goes by 10%, which means that either the debt has to go by 10% and DXY has to remain there, or dollar index has to go down by at least 7 to 10%. And then probably something like September 2011, just about May 2000, September 2011, always there was, that's when gold topped out. For some reason, commodities also started going flat to worse. And this line has been held always, the bottom line. And even in 2020 crisis, they expanded the debt so that the dollar could actually be lowered below 103 to actually stagnate it. But cycle-wise, if you really see, 1981 September was the high in yields over there. So there is a significant possibility that yield spike up, or there is an event which is about to happen in October 2021, which is again 50 year from 1971.
1982 was the beginning of the bull market in stocks, August 82, if I remember.
Exactly.
Yeah.
But the interest rates spike, topped down on September 1981.
Okay.
Come on to
Right.
that.
Okay.
So the next is again, this is debt to gold ratio. So how high can gold go? They don't stop printing or they reverse. So 1 minute, sorry. So can you see that over there, the marks? If
Yeah.
that 3515 is equivalent, what should be the breaking point? So if you calculate, the debt current value is around 14,858, right? If it has to break that 13,515, that's equivalent to 2090 gold. That was the highs. That's simple. But how high can it go? So if it goes there, it has to go to 9794, which is 50 from there. Gold rise 2090 to 50% to hit a target of 2822.
You know,
if
I know someone that has that same target for the completion of the bull market in gold. You know, they're not at 5,000, 10,000, but they're bullish. 2882 was this number based upon, I think, Elliott wave structure.
Well, we'll come on to that also. We'll prove it in
Well,
different ways.
you have 6 minutes, buddy.
Okay, I'll try to speed it
All
up.
right. All right.
So if by chance that 28822 also breaks, the gold will actually move up by 10x from there. That's around 28,231 based on the current debt.
Wow.
So we could do the same thing with silver. Now you can actually see what's happening with silver. Federal debt to silver. That's approximately, if you break it, it has to move. First target is around $70. It has to move up by 2.5 times for the first target to hit. You can see the somewhere around that 37 where I marked it. But if it has
Yeah.
to match it up with 1980 highs, it has to move up 57 times from there, which means something like $1,600. And if you actually divide Dow Gold ratio, you can actually say that the ratio will be somewhere around 15. So what you got to do is just divide 2,900 or 28,000 250 divided by 1,600. That comes to around 17.65. We can actually see that long term very in the next few charts. So this is what the Elliott wave, which they might be projecting, the 5-wave structure. This is the 5th wave they might be counting. But the problem with the 5th wave is that it can actually go parabolic. It can
Yeah.
have subwaves and then again expand. So we have to watch that level. So first level is like 2480, 2880. If it starts going above that, then that means there is something seriously wrong with all markets and all currencies. So we'll come on to that. This is where the top is for the gold. If 1901 is crossed, you can be super bullish. Everybody can be super bullish that something is structure is changing and will actually handsomely make this year 50%. All you have to do is keep $2 plus or $5, whatever risk profile. Okay.
Okay.
So this is my model, which actually is the same. If 2860 plus, the next level is around 800. Okay. So this is gold. Now, if gold has to go up, USDN has to come down. Has to be a risk off. So you can see the
Right.
trajectory from 2015. They've been trying a lot, but it is not moved away from the trend line. So if it breaks 109, probably it could hold around 101 or something like that. That trend line, which is coming down. Then
Yeah.
you get that standard deviation move, which is like a flash crash in 2019. You can see that in 2020. It's a similar move. So it's kind of inverse correlation, which gives you an argument that gold is super bullish. So if you divide
What if
gold
we
divided
break, what if we break out above that trend line?
by which one?
Does that mean a bear market for gold?
It's possible. It's very much possible, and maybe the dollar is actually really in trouble. We have no idea about it. But the euro doesn't give you the signal that we discussed in euro bonds, which will come on to that, where euro bonds might very big sell off, something like from 170 to 130. So what happens to the euro? It gets into the euro if euro bond is actually selling off. The inverse correlation. So that will actually put a lot of inflationary pressure, and that's the trigger for oil maybe. So we can see that in this chart that gold divided by USDN, if it spikes above that, it has to move 16 points or 17 points. Probably could die. So if USDN has to be 78, something like that, gold has to be 900. It's like a continuous mechanism. So you can see I did a rough calculation on this, where I said that what if a breakout 19 and 110 is there?
Okay. Are you still there? I think we lost him. Okay.
USDN.
Oh,
That's when the risk off happens. Or 1995 lows was around 78. So this is a good combination, which I believe that gold could go up and suddenly there is an arrest, a policy change around that 2800, which I've shown you. And USDN could be around 78. This could be a flash crash. This could significantly mean that all the indices all over the world sell off pretty rapidly. So we just need a trigger and watch the currencies. This is silver. I believe that you're long in silver. So if 28.7 is crossed, then I can be sure that this is a triangle. This is a $40 triangle. 28 plus 40 is around $70. So even if you don't know Elliott wave, I think 28.1 can be super bullish on anything in silver. Anything touches it. Now, this is gold silver ratio. You can see that it's holding at 68. Even when gold sold off 10%, this ratio didn't change.
Yeah.
So it has to go to something like, even if gold is like breakout is 100, what should divided by 40? Around silver should be 40 or
right, 40 used to be where it traded traditionally for a long time. So,
Yes, but we'll see that in the next chart. In 1967, it actually came down to somewhere around 16. So
okay.
that was like in a 100-year chart, you can actually significantly make out that what are the chances. So you can see over here, the pattern is very nicely set up. It's a cup and handle, reverse cup and handle. And if this is true, then it could be heading somewhere around that 15. So 68 is your mark. So this could also confirm what you're actually doing. How do you position yourself? Now, this is a 100 chart. You can see the gold silver ratio. You can see 1968 where the real problem started. It was actually Twitter told that 1967 was the period when this Palestinian-Israel problem started and the oil embargo. I thought it was 1973. But when you actually check it back, the ratio actually bottomed out over there. So can it return over there? And 40 is the region where it's illustrated.
All right, Ronan, I'm going to have to wrap it here. Now,
Okay.
okay, hold on. Now, I think a lot of people are going to have a lot of questions for you
Okay.
based upon, what you're talking about. There you go, Forex Gal, 128 crude. And anyway, will you answer questions for people that contact you on Twitter? Or
Yeah,
do you
sure.
have an email? So if you guys want to discuss some of the things that, and also the internet connection wasn't that good. There was a lot, you'll hear it later. Maybe we could improve on it for next time. But tell people how they could get a hold of you and you'd be willing to discuss any of the markets with them.
Yeah, sure. I can actually shoot a question on Twitter. I don't want any service. So
Yeah, put it
feel
in,
free to
type it in the chat.
Okay. You can actually mail me on this email, or
Okay.
you can actually contact me on Twitter, which is you can look at my profile. So
Yeah,
you can act
because
on it and
I mean, a lot of your charts are complex and but very interesting, and people might have some questions for you. So I want to thank you for your time, and you're one of the hardest working technicians I know, and I've learned a lot from you over the years, and I want to thank you, my trading warrior brother, for being with us today.
thanks, Dave. But I'd like to show you last chart before we actually wrap up.
Okay, one more.
You can look at one more chart, okay?
One
so
more.
This is the combined index. This is the combined index of Dow, FTSE, and DAX. So this is a rising wedge which is forming.
Yeah.
It's a combined index. So there is an event which is ready, and I did a small study on Fibonacci sequences where what I did is I kind of calculated the base year as 2021. So 2021, if you actually count backwards, all the major problems were actually correlated. So 13, 2008, 2001, 21, and then 34 was 1987, 1966, even 1788, which was a French Revolution. So the next
I was just a kid then. Yeah. I was
sorry?
just a kid. I was just a kid back then.
Maybe maybe
right.
you were with Sean Connery. Maybe what is that movie where they live for 300 years? Maybe.
Yeah.
But tell your listeners, focus on 3 years: 2022, 2023, 2026. These are really serious things which could happen which could actually provide a lot of volatility. I would actually give this presentation. I would give to you. So if somebody wants to read it, they can actually access it. So,
okay.
If it helps them.
That's great. All right, Ronan. Thank you, buddy.
Okay.
I'm
Thanks.
sure I'll be getting some charts from you pretty soon.
Yeah, pretty sure.
All right.
All
right.
Yeah.
All right. So that's a wrap. Everyone thank Ronan and thank him for being generous to answer any questions you guys still have after this presentation. So remember, don't just count your cycles, count your blessings, and you'll have a great cycle. So you're very welcome. People are thanking you, Ronan, and that's a wrap. That's a wrap, and you could join the team in 11 minutes for Morning Edge. So take it easy, Ronan. I'll see you. And thank you,
Thank you.
everyone. See you tomorrow. Adios.
Adios. Bye.